South Korea is making a decisive move that could reshape how investors access high-value assets. Starting in February 2026, a formal regulatory framework will go live, allowing the trading of blockchain-based securities under a new regime. The real shift. The Financial Services Commission is preparing to unveil detailed security token rules in July. Rules that will legalize fractional ownership of pooled assets, opening the door for everyday investors to buy into real estate, infrastructure, and even art through a single digital token. The FSC's announcement, expected this July, will lay out the full blueprint for what's being called a security token framework. It marks the next phase in a years-long effort that began in 2023, when South Korea first signaled its intent to bring digital securities into the regulated financial system. Now, those plans are crystallizing. Under the forthcoming security token rules, these blockchain securities will be issued and managed using distributed ledger technology, with rights like ownership stakes and dividend entitlements recorded transparently on-chain. Crucially, they'll be tradable only through licensed securities firms, embedding them directly within the country's existing financial oversight structure. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. One of the most significant elements in the upcoming FSC announcement is the legalization of fractional investment securities. This means multiple underlying assets, say, a portfolio of commercial real estate properties or a bundle of private equity stakes, can be pooled together and tokenized. Investors won't need to buy an entire building or fund. Instead, they can purchase a small fraction of the tokenized pool. The implications for tokenized real estate and other illiquid asset classes are profound. Barriers to entry that once required millions could now be lowered to thousands or even hundreds. But the scope goes beyond real estate. The regulator is also developing a roadmap for the broader tokenization of assets, including equities and debt securities. This would bring traditional financial instruments onto blockchain rails, enabling faster settlement, improved auditability, and new product innovation. The FSC also plans to expand OTC trading limits, giving both institutional and retail participants more flexibility in how they trade these regulated security tokens. For the market, this signals a serious commitment to liquidity and accessibility. The timeline is deliberate and strategic. The July guidelines will give firms months to adapt their systems, custody solutions, and compliance protocols before the February 2026 enforcement date. That window is critical. The rules are expected to clarify issuance standards, custody requirements, disclosure obligations, and investor protection rules, each a cornerstone of trust in any financial system. However, challenges remain. Cross-border trading, interoperability between blockchain platforms, and the legal treatment of tokens under existing securities laws are still unresolved. The July guidelines may provide initial answers, but the full picture will only emerge as the framework is tested in practice. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal to watch is the content of the July announcement itself. That's when we'll see whether the FSC has laid a foundation robust enough to support a scalable market for tokenized securities, or whether regulatory ambiguity could slow adoption. For investors, financial institutions, and blockchain innovators, the coming months will determine how quickly this new chapter in finance moves from blueprint to reality. The enforcement of the security token rules in February 2026 isn't the starting line. The real race begins in July.